Okay, so I'm gonna wait for the people to arrive. Still 3 minutes. Meanwhile, if you want to just write where you're from, where you're living, your country of residence, and how long have you been in trading, generally in manual trading as well as in if you have done some automated trading, would be very nice to know about it. So just write it in the chat. So it's fine, no? Screen's fine. That's great. I didn't find the microphone button. I was wondering, how's the sound? It's good. A bit distorted. Okay, we start in 2 minutes. That's great. So if you guys want to write down in the chat, just so I know a little bit where you're from, how long have you been in trading? If you have done some kind of automated trading, that would be great to know. Not many people writing. Should be a bit more interactive, guys. So otherwise, it's kind of the lecturer completely alone. Perfect. Justina's raw. 3 years in Forex. Not bad. Just write also the country of residence. It's very interesting for me to know where you guys are from. I've been traveling around. I've been lately to London. To Hong Kong in January as well. So I've been a bit in Italy quite a few times last year. From Lithuania. Perfect. Lots of programmers from there. Lots of programmers from Lithuania. Mauritius. Okay. We can start. Okay. So I'm gonna, yes, a brief introduction of myself. My name is Pablo Ortiz. I'm a citizen, and we have a trading lab in Madrid. We have been also lecturing in London, and we're going to start to lecture in Germany probably this June. We have been around in Italy, in Spain, and I've been 7 years in trading. It's been sometimes a rough time, especially at the beginning. And I very early started with automated trading. The purpose of these lectures is actually to present a trading system which originally was designed for manual trading, and we are converting it with the help of a programmer or several programmers into a fully automated trading system. So it's quite interesting for you guys if you are in manual trading for a while to learn the rules, but I would say it's even more interesting if you have the chance to automate it. I'm not going to deliver the code. I'm just going to be upfront on that. I'm going to give you the template if you want for free after the lecture. And well, let's get started. You need to understand that there's different kinds of families in trading. One of the big families is the Breakout family. I call them families because the trading style is completely different. If you do training, if you're trading a trend, or you're trading a breakout or trading ranges, is completely a different style of trading. And we need to understand that the approach is completely different. So it's a series of 4 lectures. We are starting today. I think the next one, I'm not so sure. Maybe the administrator will know. I think it's tomorrow. It's anyway in FX Street. And I'm going to deliver you the rules. That's very important. Further on, probably in June, we will continue with other lectures on automated trading, which are going to be much more on algo trading, much more specific, which is my main area of expertise. I studied mathematical physics in Germany, as well as economics in Heidelberg and in Tübingen. And basically, our trading is very numerical, very statistical. So let's start. What I'm gonna go over first of all is our philosophy or the needs of a trading system. And in my view, a trading system has to have at least 3 legs out of 6. If you have all 6 legs, it's much better, but you should have at least 3 legs. You cannot have a table which stands on itself on 2 legs, unless you live in another planet. Okay, and the ideal would be to have a system with the 6 legs if you manage. But next time when you approach a trading system, please ask for at least 3 of these legs. It's not a trading system. If somebody's telling you just the entry rules and they don't give you the exit rules, or they don't give you any filters, or they don't give you any money management or risk management or position management. We'll go in detail over this in every of these webinars, because it's very important knowledge that you really need to know and understand. Okay, the first leg is the entry rules. Any entry rule is composed of 2 parts, always. It's like a gun. You have a shotgun, you're going to hunt, and ideally you shouldn't have the shotgun loaded all the time because you're going to shoot somebody. Okay, so you have to have a proper setup to hunt. That means you're going to go to the land or the area where there is deers or whatever thing you're going to hunt, and that's called the setup, the ideal conditions for your trading system. It's also called the heart of the system, and the other part is the confirmation of the trigger. It's called in many ways in the literature, but it doesn't matter which way you call it. The main thing is that there is 2 parts to any entry rule. Okay, and normally in general entry rules are designed with an AND logic. That means that I need this condition to happen, and this condition, and this condition, and this condition. Generally, we need at least 2, but sometimes it's 3 conditions, 4 conditions. It depends. Okay, so a classical example of this would be 2 moving averages which cross each other. This is the classical signal that we learn when we start trading, when we are very innocent about trading, so to say, and we have a long moving average, in this case 65. It's just one example, okay? It's not a good entry rule. And we have another moving average here, which is, in this case, let's start with a 32 moving average, and the entry rule could be such as when the moving average, let's say, in this case, when blue is above red, the long is above the short, we only sell. In the other case, when the blue is below the red or orange, we only buy. Okay, but the rule could be such as when the long crosses the short and in the next candle they still are in the other direction, they crossed just now, we sell. You see here, we have also the confirmation in this simple rule. It's not just a cross, because you don't know when they are painting itself what's going to happen in the next candle on this rule. Okay, in this case, we would have 1, 2, 3 signals on this screen. Everybody can see that, right? You can see my mouse, right? 1, 2, 3 signals. What happens if we reduce this moving average, the short one, and we suddenly have 1, 2, 3, 4, 5, 6 signals? That means every entry rule filters. You get more or less trades if you modify the parameters of any entry rule in any trading system. But that doesn't mean that the filter is an entry rule. I want you to distinguish this very clearly, because many people confuse both things, a filter and an entry rule. We'll go in the next 2 slides. In 2 slides, we'll go in detail what is a filter and what it's not. Okay, just keep the idea that any entry rule, if you move the parameters, you'll get more or less trades. Okay, that's clear. Very good. And 2 legs to the first leg. Very good. Second leg, exit rules. A system to be called system, in our definition, has to have at least 1 exit rule in form of a stop loss. For me, if you don't have a stop loss, whether dynamic or fixed, we'll see the difference now, it's not a trading system. Okay? It's something else, but it's not a system. And I want to be very clear on that, because many people don't see it so harsh as I see it, and then they commit huge mistakes. And it's not the discourse of you have a stop loss, whatever. It's simply not a system. Okay? You are not doing systematic trading if you don't have a stop loss. You can have 2 types of stop losses. You can have a fixed stop loss That means I decide this would be the entry. For example, I decide whatever above here, how many points I want to have it above. In this case, 112 pips above, fixed stop loss, whatever. I can measure it and say every time 112 pips above, right? Or I can do a dynamic stop loss. I'm putting here an ATR. It's an indicator which measures volatility. And in the moment of the entry, which is here, the next candle, that's very important. Here, I have that my average range is 20 pips. Do you see that? So I can say twice the average moving, the ATRs, excuse me. That means that my stop loss in this case would be 40. But if I enter in another case, for example, here, maybe the volatility was higher, okay, or lower in this case, and then my stop loss, if it's twice the ATR, in this case is 18 pips. So my stop loss in this case is 36 pips. That's what we call a dynamic stop loss. Dynamic stop losses happen when they are not always regular. You can have also dynamic stop losses if you say put it below the last two lows. That's a dynamic stop loss as well, okay? But it's still a stop loss, okay? So we can have dynamic or fixed stop losses. That's very important to understand. Other possible exit rules, which are very typical, is the reverse signal. What is the reverse signal? Let's say, for example, you're entering, in this example, you're entering here short, right? I think the latest to exit is when this becomes a buy signal. That's a reverse signal, okay? You can have reverse signals in the indicator itself or in the oscillator below or in whichever was the entry signal when it reverses. The reverse signal means the opposite, okay? What was short became long and what was long became short. Okay, I'm gonna, after this slide, make a short stop just to see how you follow, if everything is clear or not. Okay, the oscillator levels, that can be another exit rule. You can decide to exit on a certain level. For example, in this case, I can put here on the ATR, sorry that I left it in Spanish there. I didn't notice the language. Next time, it's not gonna happen, okay? So, for example, we have here a level of volatility, which maybe it's too dangerous for us. Let's say 30. Okay. When it crosses from below here, we could exit, for example. That would be a level of an oscillator. It's a very classical way of exiting. Whichever level. You can take RSI, you can take whatever you want. CCI. There's a lot of oscillators of this kind. Price levels. That's a very classical exit. No, in price action. No, when you arrive to the last maximum or minus X points or things like that. And a very usual exit in scalpers is the timer. If in 300 minutes you didn't get to your target, it's time to go out of the trade with a little loss. And you will accept minus 12 points, minus 8 points. I've seen plenty of systems that have that. These are classical exit rules. There's a lot more, but so you have a general idea. So how are you doing, guys? Is it clear? Do you follow? Some questions as far? Very good. Only Joe and Justinas are writing. Danny is writing. The other guys can also write, and girls. Okay, very good. So that's clear. Very good. Anyway, it's been recorded, so you can watch it tomorrow. Okay, what is a filter? Now, this is very important. A filter is an additional rule. Do you remember I think it's called the crib, when you filter out the chaff and the wheat? The classical thing of the chaff and the wheat. You don't have sound? Katselos? George? Do we have sound, guys? Do we have sound? It's your George. Check out your. I'm gonna write him here. Okay, yeah. If you can help me, that would be great, George. Okay, so we have here the classical crib, and we are filtering out the chaff and the wheat. and we have two sizes of the thing, and it depends completely on the size of your corn. Okay, what is the size of the corn in trading to make this parallel? Well, the size of the corn of the trading is actually the risk-reward ratio. What you want is that the bad trades go through, right? The bad trades. And you want the good trades to stay. And that's a good filter. What's not a good filter is a filter that leaves one trade per year. That's the winning trade. And you have a back test of 12 years and you have 12 winning trades. That's called curve fitting. That's called over filtering. That's called over optimization. So be very careful with the filters. You cannot put filters as many as you want, because what you will do is you will not get results in the future. You will curve fit your system so perfectly to the historical data series that there is no chance it's going to make real money in the future. So that's one of the big problems with programmers and people that make trading systems, EAs, that basically they overfilter. They don't understand that you must be very, very careful when you filter things out. Okay? But it's additional. This is very, very important. Okay? So now we have the three legs. We could make now a trading system, but we're going to put more legs to make it more robust. Position management. I want you to understand the difference between a trade and a position. Okay, George, I hope you'll be back soon. And the difference between a trade and a position is basically a trade is just one single volume choice in a single moment. But I could decide to re-enter. Let's say I would buy on the euro dollar, no, and I was wrong. The trade went against me, and I buy again. These two trades make together a position. Okay, it's basically the decisions we take in different trades that are common to one style of trading that make a position. And many people confuse the trade with that position, and it's not the same. And basically, when we talk about risk management, you heard the story, the classical say of don't risk more than 2% of your capital. It's wrongly said because they don't tell you of which capital, and they don't tell you if it's maximal risk or average risk. But the bottom line is we're talking about positions here. So if you put three trades, you shouldn't risk in all three trades more than 2%, because these three trades in a row make a position. Okay, so what is position management? Position management is once you're in the trade, you cannot go out unless you call the broker and he cancels out the trade, which is not going to happen. Okay, but basically there's three ways to handle this. The first one is you can re-entry. Let's say, for instance, you bought, you buy again. You can do a partial close. That's very good, actually, because you already take some profits and let the rest run in the market. And you can have a trailing stop. A trailing stop, I guess everybody knows what it is. You just move the stop loss dynamically. And the best trailing stops are not just 10 by 10 pips, but they're dynamical in itself. Okay. We will see a trading stop idea in this system. Okay, so it's very important that you understand that the trailing stop is not an exit roll. It's position management. Okay, you have your exit rolls, and additionally, you can put a trailing stop. Okay, that's very, very important. Not just to believe fully on the trailing stop itself. Okay, money management. I don't want to enter into this. It's a very long topic. It could be actually a series of 10 webinars, but it answers just a simple question. How much should I trade? How much should I buy? How much volume? Okay, how many lots or micro lots or mini lots or yards or whatever I'm buying should I do? And when should I buy it? It's the timing of the volume. That's very, very important. Many people don't understand it. And it has so many approaches. You can buy more depending if the conditions are favorable to your system. That's called market regime. You can even do a routine that tells you when your trading system has favorable conditions that can be optimized. Okay, or you can do classical money management styles, like for example, fixed risk, like you're risking every time 1% on average or 2% on maximum. And what we do actually with trading systems is we use even simpler ways. For the first analysis, we take a fixed lot size. That means it's always the same lot size. That doesn't mean we are going to trade it like this, but it's going to give us a very clear view on whether the system is really profitable or not on a first approach. So let's leave it at that. We're going to just keep always the same position size to analyze the system. I have an additional leg which not every trader has, or they don't see it as an independent leg, which is the risk management. For me, it's very, very important in my trading method. We developed a method of 5 safety nets. I cannot go into detail now. I will do a webinar about it. And it's very, very important that you understand you cannot have ever more than 23% of maximal drawdown in your account. That simply cannot happen because there is mathematical reasons for that, which I cannot explain today. You cannot have more than a 15% losing streak in a row. If you lose 15% in a row, it can be in 1 day, in 1 week, in 2 weeks, but you don't have, these are consecutive losing trades, then you have a problem. As well as if you have you cannot have a trade which is more than 2%, actually a position, not a trade, a position that is more than 2% of your initial capital. And on average, you should never risk more than 1%, 1.1, 1.2% of your initial capital. That's basically having to do with our style of trading. I will not enter into it, but only so you understand later what I'm going to show you, which are basically the back tests of the manual trading system, which got converted to an EA and a robot for Forex. Okay, so now comes the fun. Is it clear? Yeah, there is a 5th safety net, Boyki, which has to do with the recovery of the drawdown by the expectancy. It's a bit complex. I don't want to go into it, but you shouldn't have a recovery. Thanks for asking, which is more than when you go into the drawdown. For instance, let's give just one quick example. When you're losing 10% of your capital, basically you're losing here 10%. To recover is not 10%. This you should know, all of you guys here, unless you're newbies to Forex or to trading. It costs you 11.11% to recover from a 10% drawdown. So the difference between these two figures is 1.1%. That's the recovery divergence, we call it. And if you're doing on average 0.3%, that means $30. That's a very good system. You're doing on average 0.3% of your capital. This means you need 3 more trades to recover than to go into the pit. That's what we call the safety net number 5. You should never have a recovery that's more than 20, 30 trades to go up than to go down. Okay, I explained very quickly. I will do a webinar about this because it's very important, and that you should really calculate this every time. Okay, so that's the safety net number 5. Okay, so now comes the fun. I hope everything was clear as far, because I'm going to build the system now. This was the theory. Please stop me. Was it clear? Do you have any questions? We're in the middle of the webinar. 100% clear? Okay. Great. Still clear. That's very good. Okay, so I'm going to build a system which is a classical breakout system. I'm going to build it on the pound, the cable, on 1 hour time frame. Okay, and what we're going to do here is we're going to make it, first of all, a channel. You see these 2 gray lines? It's a channel made out of a moving average, which is I can give you this template later for free, so don't worry about it. And it's being recorded, so you can go over the video as many times as you need to understand the trading system. But basically, it's like a channel which is 30, in this case exponential. It also works very well on simple, I tell you because we optimized it. We made the robot, and it works. It works very well, you know. And it's a 30 moving average on the highs, and this is a 30 moving average on the lows. That creates the channel. You see, on the highs and on the lows, and we have a channel all over the price, all over the place. We have a channel following us, and we're going to look for moments where exactly this channel breaks, where we open a candle above or below the channel. For example, I put in gray lines the entry points, and I put the stop losses in red, and I put the green is the take profit points. Okay, the targets. In this example here, I don't know if you see it well. If not, please tell me. I'm going to try to make it closer. For example, this one. Here's the channel, right? I wait for the first candle to open above or below the channel. In this case, the candle opened here, right? Well, actually, it opened here. Okay, to make it properly. Here's the opening of the candle. And now, you remember the entry rules were two parts, right? First part, setup. Did the candle open above or below the channel? Yes or no? No, I do nothing. No, I do nothing. Here, it opened, right? Okay, so here, it opened below, right? And I look for the confirmation. The confirmation is going to be an ATR, which measures the volatility of the last 30 periods, and its own moving average. If the volatility of the last 30 periods is above the average of the last 5 periods, which means blue above gray, I confirm, I enter the trade. That's very, very important. Okay, so this is the setup plus the confirmation. This would be a sell trade. I'm below the channel, right? I'm looking for breakouts. That means I'm looking for the price to break and go in this direction. And I would put a stop loss on the opposite part of the channel. So here is the entry. I measure here is the red line. It's not properly done. It's exactly here, if you see it. There is my stop loss. Okay, so I have a stop loss, which is basically in this case 83 pips distance. Okay, it's quite far, but we will see what happens. What is the exit rule? I'm going to give you the basic system rules, and later we are going to improve this. Okay, the exit rule is another oscillator, which is an ATR, in this case of half the period, that means 14 periods, okay, and a moving average of the same oscillator, the red one, is the moving average, right, of 4 periods. That means I'm going to look for the opposite. I'm going to look for the moment where the volatility already went down, and this I'm going to confirm by the red being above the blue. That means that the volatility of the last 4 periods, it's higher than the volatility of the last 14. That means I'm reducing my volatility, okay? And this means that the trade is distinguishing. And on the first candle when this happens, which is here at the opening, I'm going to close the trade. So here we go. We made 147 pips. Sorry, 152 pips in 12 hours. You see that, right? Well, more or less 152.1 pips on 13 hours, on 12 hours, okay? With a risk of 88 pips. So it's a very good ratio. It's a very good risk-reward ratio. We earned 150 points, risking 80 points. Okay, I can show you another trade here and another trade here. I have a lot of buy trades here to show you, but I want to know if you guys understood the basic core of the system. I'm going to put the slide now because now it's going to be understandable. So we are looking here for the channel of moving average on high and low, simple or exponential. We are watching every candle opening above or below the channel every hour, and we confirm with the first oscillator. And it's going to be gray above blue. Sorry, I put it wrong. Sorry, it's blue above gray. This is going to change immediately because otherwise it's going to be messy. Sorry, it's blue above gray. see my mouse now. Blue above gray. Okay, so we are waiting whether sell or buy. It doesn't matter. Blue has to be above gray for confirm. So we will only trade from here to here. Okay, we'll only trade from here to here at candle opening. Even if it's above, like here, we are not going to trade here. All this area is not tradable. We trade only here. This is the first candle that opens above, and blue is above gray. Enter. Here. Exit. You see? Red above blue. Whether it doesn't matter whether it's a buy trade or a sell trade. It's always blue above gray, and it's always red above blue. Okay? That's very, very important, because otherwise it's not going to work. Okay? The stop loss is going to be on the other side of the channel. Okay? And the other exit rule is going to be the red oscillator. Okay, guys, how are you doing? Is this clear? Because I'm going to make it more complicated now. Is this clear for everybody? I use this, yeah, very good question, Justinas. I use it mainly on the 1 hour chart, but I found also on the M30 good settings, and I'm going to show you later. Okay, because we automated this bot, and we improved it a little bit. It was a little bit of tweaking, and well, this is a result. Okay, this is on the pound 1 hour time frame. This is the back test of 10 years since January 2005 till today on the pound. Made a very, very good result with a very good profit factor. Okay, but there's still a bit of improvements. And this is the euro dollar and 30. Euro dollar and 30. Okay. So it also works on the M30. It also works on the daily chart. It also works on the H4 chart, but you get more trades on the 1 hour time frame. And M30 is kind of difficult to tweak it, so you get good results. It was a very good question. Thanks for asking. Some more questions, because I'm gonna advance on it, and I'm gonna make it even more. I'm gonna improve the system now. This was the original manual strategy of a guy that, whatever, I collected over 900 strategies over the last 7 years I'm training, and I have a huge depository file. I will give it to you. I will give to you the template, MRC. It's the moving average of the ATR. This one is the moving average of the ATR. No, I mean, you are trading not in MT4. Where are you trading, Boyki? You should trade in MetaTrader anyway, if you want to automate. But where are you trading? I'm going to give you the template, guys. You just need to send us an email, and it's for free. So you don't need to build this up. I will give you the channel plus these two oscillators. No problem. Just tell me what you trade, and I will tell you. If it's in TradeStation, you have no problem to do this. If it's Ninja, either. I don't know. Just tell me which platform you're trading on, and I will help you with that. Okay. The template only works in MetaTrader, but you can adjust it to another platform. If you tell me the platform, I will kindly help you with that. Yeah. Just tell me where you trade, and no problem. Okay, so now comes the interesting part. Now comes the algo part, where we algo traders say, okay, the system is okay. We coded it. It made some money. It was not bad, but it was not so beautiful as I showed you. Okay, and we said, okay, how can we improve this? So basically, what we did is what we did. It's obvious. We have 6 legs. We had only 2 legs. We needed at least the 3rd leg, which was the filter. So we did, first thing, a trend filter. We said, listen, it makes no sense that, for example, let's put here another moving average. You see that, no? 90 periods. It's orange. And, for example, I would have a signal here, you see, but it made very little money, and And it would make sense because if I put a moving average, which is very long, 90 periods, 117 periods, actually we got the optimum in the pound on a moving average of 117 periods. You can see here the parameters. Yeah. The trend filter, let me show you here, was 117 pips. Sorry, periods for filtering out. Okay, I'm going to put it here, 117. And you can also check for others. That means that we will only trade buys when the channel, the complete channel, both sides of the channel are above the orange line, and we will only trade sells when the complete channel is below the orange line, because we have clear confirmation that it's uptrending or downtrending, and we don't want to break out in the opposite direction. It's kind of suicidal. Okay, so this worked very well. We made the improvements on it, like we coded it. It was just one evening of coding, and hurrah, it works better. So here we go, and we see here very clearly only buys, and we have a lot of beautiful signals here. You see it enters here. Stop loss is very near. Okay, and we go out here, 90 pips. Okay, and the stop loss is only here. The stop loss, by the way, jumped because of this spike here. So this trade was losing by little, but it lost. It doesn't matter. You can have losing trades, right? It's a pity, but it lost. You see the spike here, right? But so this is what we call a trend filter. The system is still a breakout system. You have to have this clear, but it's filtered by trend. So you need to understand that trading systems are like very long surnames. Like in my country, I don't know if you know that, but we have a lot of surnames, especially in the north of our country. We have the last name of the mother as well, first name, last name of the father, last name of the mother, and then some people have the last name of the grandfather and the last name of the grandmother. Well, with trading system is the same thing. What we have here is a volatility breakout channel system, which is filtered by a moving average, by a trend filter. Okay, and it improves quite a lot. What other improvements did we do? And let me tell you, let me let you in on this, that normally breakout systems, they improve a lot with filters. The filter is the thing that you have to have in a breakout system. Okay, every family is different. We will see in these lectures, I think in 3 days or 4 days, in 4 lectures, we'll see a classical trend system. And you will see that in the trend system, the main thing is the exit. It's very easy to detect a trend. You'll always be late, but it's very difficult to jump out of a trend. On the opposite, it's very important to filter out a breakout system. Very, very important. So what else we did? We also put, I didn't write it here on the slide, but we put an hour filter. We decided to take out some hours. We said, listen, take out the worst hours, because it's going to improve the system. And it worked very well. Basically, what we did is we took a few hours per day. We didn't take all the hours per day. We took maybe 6 or 12 hours of the day out, and it improved quite beautifully. Okay. What else we did? We missed the fourth leg. You remember it was 6 legs to a trading system? Just as a reminder, now we have filters, actually 2 of them. We have a trend filter, we have an hour filter. Okay, we work on the 4th leg, position management. And what we did, we were simply putting a trailing stop. And for a trailing stop, you see here the lila line. What we did is we put a moving average. In this case, it works much better linear weighting moving average on the close. I will give you this, guys. Don't worry. You'll get it on the template. But it was shifted. This is very important. Originally, when you see the moving average, it comes like this. It's the average. It goes in the middle. So for a trailing stop, it's a very good idea. You normally shift it 4 to 7 periods to the right. So what you do is basically, this was the entry. You see it here. Well, this one hit the stop loss here. Okay, let's take another one as an example. For example, this entry here. Why this one? Because this is the first time that blue is above gray. Okay. And here you have the trailing stop, and you see how beautiful it runs. It only touches the price here, which is basically the same exit than the red above blue, but it has one benefit, that you are more secure in the trade. You are not scared to hit the stop loss. And what you do with this trailing system, you need to have a wait period. Okay? You need to have a wait period. So it's 1, 2, 3, 4, 5, 6. Why called expert advisors? Because this system, we converted it into a robot. And they're called expert advisors when they're used for MetaTrader. That's the general name that is used in the industry. When you're trading for MT4 and you make a robot, like we did, it's here, the robot. Well, I have a lot of robots, but we put channel 6 because we number them. This is a robot. That's called an expert advisor. That's a robot. It's a automated trading strategy. It's good you ask, because I suppose you guys know all of this, and I just keep talking, and maybe it's not that clear. Okay, so this trailing stop is quite an improvement. Let's say you wait 6 candles here to activate it, and on this candle, on the opening, you move the stop here. On this one, you move it here, you see. On this one, you move it here. On this one, you keep it, and if it goes lower than the trailing stop you already moved, you keep it. Here you keep it, 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 you keep it. On this candle, you move it here. On this candle, you move it here. And on this candle, you move it here, and you open the candle and it closes. Okay? So that's very, very clear. Okay, we have 5 minutes left. That were the improvements to the trading system. That's basically it. I mean, I'm going to explain a bit later what we do. We're going to have lectures in London probably in June. I don't know if you guys are around, somebody around London here and in the UK, and just ask me. Was it understandable? Did you understand all the setup of the system? Entry rules, exit rules. Was it clear? Okay, so this is our email here. If you guys, well, we have a whole method about EAs. We'll talk about this. This is our email. Okay, excuse me, it's with points. It's wrongly. It's with points or it's with dash, Olga, with hyphen? With points. Okay, sorry. All about EAs. You just can request the template. Just send us your name, last name, country of residence, your Skype, your cell phone, years in trading, and you'll get the template in your email. Okay. All about EAs at gmail.com. Just write us there. I'm sorry, our English site is not ready yet. It's all about expert advisors. It's very, it's very old. It's not actualized, but we need to put the English side because it makes no sense. I put the Spanish or whatever Italian side, and just follow our webinars this month. We'll deliver one trading system per webinar. The next trading system is going to be the opposite of this. It's going to be a false breakout trading system, which is basically a range system, and you should combine them together. Okay, so I think it's quite interesting. You can reach us here in this email for any questions you may have, and just ask me whatever you're very silent group. So I'm concerned if you got the rules or if you didn't, and if you got the whole philosophy that you need to make robust trading systems. They must have clear. You don't need to learn Spanish at all. We deliver in 5 languages actually. Where are you from, Boyki? You don't need to learn Spanish. The courses we do in our trading lab are in Italian, I have a very good friend from Greece, also in the Traders magazine, Janis, you may know him, and we do everything in 5 languages, so there is no problem. Okay, all our education. Okay, guys, so I hope you enjoyed the trading system. It was quite technical. The other lectures in June will be more about automated trading. And just to show you the beauty of this, that we have our own software here. This was the back test, okay? And we combined the two sets that I showed you, the one on the euro dollar already programmed. You see, 10 years from 2005 till today. You can see it here. 10 years of back test. The same with the euro dollar. Okay, it's quite a beautiful back test. It's a lot of years. It made 165% earnings in these 9 years, just on the euro dollar in back test. Okay, and we combined them both, and we got a beautiful monthly earning distribution of the back test. And this is just an example what we do at the end. We combine the different pairs together to have more profitability. We combine the cable on hourly time frame with the euro dollar on the 30 time frame, and together the drawdown actually of both is less than the drawdown alone. If you see here, the pound dollar has a drawdown of 15%. It was drawn of 15.3%. The euro dollar over the 10 years, has a 10.5 drawdown, and together they have less. They have 14% drawdown. This is part of our method, and you can see here the beauty that when we trade this together on the pound and on the euro dollar, they annulate. What's not good, Boyke, he's asking if robots are not good. And what's not good is when people use robots without education. Because the majority of people think, I just take the robot and just put it in the market and I make money. And that's not true. That's a fairy tale. Robots are very profitable if you know how to work with them. You need to know a lot. You need to know a lot about optimization. You need to know how to distinguish a good from a bad robot. It's not just picking up anything or buying anything. As a matter of fact, we don't recommend to buy robots firsthand. Okay. It works on other pairs, Justinas. It works. I would say it works on all the pairs, but not on Australian Canadian, not on New Zealand Canadian, and I don't remember this. It was 4 pairs which are not very good, But it takes a lot of work. Why does it work on all the pairs? Oh, I don't understand your question, Boyke. Or why robots are not good? I don't know. It's 2 people talking, and I got mixed up. Basically, it works on many pairs. Yeah. Why it doesn't work on some pairs? Because it simply doesn't work on the breakout. I mean, every pair is very particular, and you have strategies that simply don't work, You joined late to this session. Yeah, of course, it will be recorded. It will be. You can talk to the administrator. I think tomorrow or after tomorrow it will be live, the video. Don't worry, Dicky. You'll watch it. Okay. So guys, if you want the template, it's for free. Just send us your info. Okay. If you need anything, yeah, it's gonna be on archives. You have it there. Okay. All about EAs. This was just an introduction. It's quite a funny system. You can treat it manually. You just need to watch the charts every hour. You can try it. Try it first in demo, please. Mainly on the pound and hourly time frame, but it works on other, but you need to adjust it quite a lot. And you need to filter the hours, and it's more of a programming work. If you want to trade it manually, I would recommend stay on the pound, on the cable. And if you want to automate it, just do the improvements I told you. Okay. It's the same in Depot. In Gmail, you can put it with points or without points, and it will arrive the same way. Okay. So just put your data there if you want to be in contact with us. Remember, name, last name, country of residence, Skype, cell phone, yours in trading. And I repeat you, the course, which is 5 days long, is in English. Even if it's in Madrid, we live in a very small world. I'm traveling all over the place. I'm going to Rimini very soon. It's 100 euros with Ryanair. It's not a problem, because we have a spectacular trading room here with a beautiful terrace and with tapas on all of it. Okay, okay, guys, great to meet you. I think I'm gonna be around. I think it's tomorrow. Okay, and we need to cut it down now. Okay, just try the strategy. If you can program, you're welcome to do that. Okay, and if you have any improvements or ideas about the strategy, go ahead and write me. Okay. So very nice to be around and hope to see you. I don't know when it's going to be. I think it's going to be tomorrow, the false breakout. Okay. You want me to scroll up? I didn't understand, Boyki. Thanks to you guys. I see you tomorrow. Okay. Thanks.